Hello everyone. Today we're going to talk about the US stock market, but first I'd like to go back to yesterday's video where we analyzed Tesla's stock. Yesterday the shares were priced at $439 and today they're already at $402. If you pay attention, you'll see that I opened a short position on 46 shares and right now they're bringing in about $1,200 in profit. Here you go. It's right here on my phone. I'm actually trading from my phone. The app is called QuantFury. But I'm just talking about what I'm doing. I'm by no means encouraging you to follow my actions. It just seemed to me like a very clear situation pointing towards a decline. And today we're going to look at a second company whose situation is very similar to Tesla's. This company is called Palantir. This company is a contractor for the US Department of Defense, which I think is now called the Department of War. Trump is always renaming things, and I have to say, that's a direct reference to George Orwell's novel, 1984. There, too, there was a ministry of war and a ministry of love. We live in a dystopia, and no one is even trying to hide it anymore. Well, let's move on to the stocks. Last week, the stock closed in the red, with a bearish engulfing pattern. What's particularly interesting is that the week before last set a new all-time high and closed with a green candle, while last week again set a new all-time high, but this time closed with a red candle and an engulfing pattern. And that's a very strong short setup. In addition to everything else, there's another strong factor here. Here, I'm drawing a line, making it yellow, making it bold, and turning off the magnet so it doesn't get in our way. And we can see that the price highs are consistently rising. At the same time, the RSI highs are consistently falling. This is a situation where the price highs are increasing, but the indicator highs are consistently decreasing. Each subsequent one, well, here's one high and here's the second. The second high, in case someone doesn't understand what a high is, and it's going down. This is called divergence or a discrepancy. And this divergence is a very strong indication in favor of a decline. The target levels for a decline according to the RSI indicator are the 50 zone and the 30 zone. From the chart's perspective, the target levels are, well, in my opinion, based on how I analyze charts. This is the level of about $154.50. That is, this was our first stop here. After that, we traded around this level for quite a while. But this is essentially a support level, and here a very serious correction is forming. And that's why the next target level is this little green level here. Let's mark it. This is the $119 level. Well, again, purely technically, it's this zone. Let's mark it with this crooked rectangle. This is the $130 to $125 zone, the area of the 50-week moving average. We've already reached the 50-week moving average, so there could be a pause here as well, but there could also be a continuation down to the 100-week moving average, which is already at $80. Let's delete absolutely everything and switch to monthly candles. And here too, there's something to look at. Notice that on the monthly candles, starting from January 2023, there was a very sharp rise, which happened practically without a single correction. So you can't really call this situation a correction. At most, we could reclassify it as a flat correction, something like that, within a rectangle. Although here it looks like it's going down, in reality it wasn't decreasing. So in other words, there hasn't been a correction since January 2023, throughout all of 2023, 2024, and almost all of 2025, that's 3 years. Accordingly, this correction, according to the Fibonacci retracement, I don't really like such tools, but let's turn it on. It seems warranted. We need to switch this retracement to a logarithmic chart because I use a logarithmic price scale. And once we've switched it, we see that the nearest correction level, 23.6%, is at about $90, roughly $89.76, and it fits quite well. Right here, we had a kind of consolidation and pause zone. So from the perspective of monthly candles, $90 is the nearest target level to which this stock may, and with high probability will, correct. Notice that the RSI value was around 95. That's also extremely high. And when you see a value of 95 on any time frame, I don't know if you should open a short, but you definitely should close your long on this particular time frame. Of course, if you're trading on the weekly time frame or investing based on the weekly time frame and you see an RSI value of 95 on the 5-minute or 1-hour chart, you can just ignore it. But in this case, it's the monthly time frame. Do you realize how serious this is? That means the drop might not be $90, but rather 38.2%. That's already $54. And that's almost 3 times compared to even the current price. Then on the monthly candles, a bearish engulfing pattern is also forming. We could end this video here, but it wouldn't be complete if we didn't look at the daily candles. And we'll probably stop there. Let's take a look at what happened on the daily candles. On the daily candles, notice that even though it was over a long period, we repeatedly went here to the 100-day, here to the 200-day, and again to the 100-day. Well, here, to be fair, there was quite a long period where we didn't touch any of the moving averages. And recently, I'll even zoom in here, notice that we've been trading along the 50-day moving average in this zone for quite a while. In this area, we touched the 50-day, here again the 50-day, and here as well the 50-day. Here there was already a false breakout, and then we broke through again. This suggests that we might not stop at the 100-day moving average, which is almost a guaranteed target for us at 167. $168, and we could go straight to the 200-day at $138. I want to emphasize that according to the monthly candles, the minimum downside target is 90. 90 or even lower. On that note, I suggest we end the video here. From my point of view, this is a potentially interesting point to enter a short position. If you are opening a short position, you absolutely must set a stop loss. The ideal stop loss is quite expensive, but not more expensive than the downside targets. This stop should be set above the high of last week's candle. That is above the high around $207.5, above this level. But if you want a very tight stop and don't want to risk a large percentage loss, in that case, I would at least set it above today's daily candle, above $182, or better yet, at least above this local high, above $195. That's where we'll end this video. The next review will probably be about the cryptocurrency market. Subscribe to the channel, leave likes or dislikes, and write comments. I would be happy to read them. Goodbye.